Hello, I'm Robert and welcome to my channel, where I talk about everything automated algorithmic trading, or simply algo trading. Today is going to be an interesting video in that I'm going to do a Jackrabbit TV recipe. With the upcoming bull run being so aggressively predicted within the cryptocurrency markets, I wanted a recipe that would do well, but at the same time hedge against the possibility that the market might not do as well as some expect. So I sat down and came up with what we have on the screen. And that is what we're going to talk about in this video. Before we get too far in it though, if you like this video, please give it a thumbs up. And if you're not subscribed, please subscribe to the channel. It really does help me out in growing the channel and getting this information out. Now let's get straight into the video. I'm using a MACD ADX combination coupled with Jackrabbit's DCA module. Now we're going to go through all of the settings of all of these, but it's very simple. I'm using a 2% take profit with a 1.5% deviation. So as you can see, for the last 71 days, it's made 6 trades. It's not overly aggressive, so you can use larger positions. And as you can see, the amount of accumulation is extremely limited. Now, it's not overly defensive either. It's kind of in the middle of just right, and it does work on every time frame. I am just using the 5-minute one for demonstration purposes of the trades themselves. So let's start out with the MACD itself and look at the settings. It's not overly complicated. Historic candles only, of course. And for this MACD, I've tweaked it a little bit to be a little more aggressive than the traditional settings. But you'll notice I've stuck to my standard practice of prime numbers. That's really all the changes I've made to the MACD. Simple, short, and sweet. No confirmation. So the MACD is very easy, very simple, straightforward process. Now let's look at the ADX. Also a few minor tweaks, but overall it does extremely well. Now I've linked it to the MACD module. And again, using prime numbers, a length of 13, and a minimum threshold of 31. I don't want to capture every single possible trade. I want a little bit more than the standard 25. Now you can play with this number and get different settings and different results, but I wanted to try to find that sweet spot between too aggressive and not enough purchases. And for me, this seemed to hit the spot very nicely. And that's the only change that I've done. Now let's look at the DCA module. The DCA module is a little bit more complicated, but not by much. I want the entry point to be driven by the strategy, but I want the sells to be driven by the take profit. In this case, 2%. Because this is not very aggressive, I want to take an aggressive stance on when entries take place. The deviation is 1.5%, which is a reasonable level, but it does extremely well. You can lower it if you want to be a little more aggressive in your opportunities, but you will increase your exposure. The take profit is 2%. Again, nice and simple and easy. Now I chose to exit on the wick. For TradingView, that is important, and I'm going to demonstrate why. And really, this is it. This is all you need. If you want, you can put an exit point in or a holding point. That's up to you. But I wanted to keep my demonstration very simple. So let's go find what a sell or a buy looks like from the DCA standpoint. Okay, here we go. Now it's important to remember not to chase profits. So be glad for the profit you have, but don't chase them. Here's a good example. It does well. We get in right here, and we get out. Nice and clean. So let's go look for another one. Let's see if we can find something interesting. Here's another one that took several accumulations. Here we see an accumulation, and here we see an accumulation. So this particular trade took 3 accumulations. Now you could use a stop loss practice if you wanted, but I prefer accumulations as my way of making profits. Again, remember, you need to think about hedging. And of course, the exit point, as soon as I find my mouse, and my take profit right here. Now, as you can see, I could probably squeeze a little more out of the market, but I'm looking at a conservative, simple 2%, get my money, get out, go on to the next one. Nice and simple. Never chase profits. Here is another simple process, and we have accumulation. And another simple trade that did well. So as you can see, even though it is slightly aggressive on this asset, it may not be all the time. And you can adjust that appropriately to your own risks. Here is one that is a little more aggressive, and it's, well, taken on quite a few accumulations. But overall, it's done good. So now let's look at all of the chart. And here we have a total of 6 trades in the last 71 days on the 5-minute time frame. Remember, you can use any time frame you want. For this particular system, it took 5 trades. So if you go through different coins and assets, you could probably get away with a maximum restriction of 10 possible positions. And it made an average of 2.1%. So it does extremely well, and it is very refined. Now let's go through and look at a few different pairs and see how the strategy stacks up, and talk about some possible ways of really taking advantage of this situation, particularly if you want a diversification within your portfolio and you want some kind of a hedging process. Ideally, trading with a very small amount with multiple coins using Jackrabbit Relay would be a good way of capturing a wide range of volatile situations, but still mitigating your risk very efficiently. So we're looking at ADA, and we see that over the last 71 days, it made 3 trades with an average of roughly 1.7%. And this is a one-hit wonder. It only took 1 trade per each trade cycle. So this would be a good way to really mitigate for this particular asset. So let's keep going and see how it looks on a wide range of coins that may not necessarily be the best in the market. So here's another one with 2 trade cycles at a 1.9%. So this strategy is one that you want to have a large number of coins sending signals, but you only want to take 5 or 6 at a time based upon what your balance or budget is. Remember to use Relay's max assets ability to limit how many assets you have at one given time. So this gives you a nice way of racking up a huge amount of assets, but keeping a very limited potential. Okay, here we have the asset ARPA chain, and it did 12 trade cycles, 2%. So overall, that is pretty good. And if you're using a compounding system, such as 1% for the amount you're trading, this is going to be very nice. Again, manage your risk carefully with hedging. Remember, lower level assets in terms of volume are going to have more accumulation. So you'll want to take time to study each of these carefully within your accumulation cycles. But overall, you get the point that a lot of these are really quite good with the right strategy. And if we do go into a bull market, the way many experts are predicting, then this strategy will profit nicely, but it is still defensive enough that it will protect you. So let's see if we can go find a few of the more difficult coins to deal with. BAT has always been a difficult coin to deal with because of its unpredictability. And yet, with this strategy, it made a rough 2.6% average profit over 6 trade cycles. That's not bad. The time frame is still about 71 days. So let's see what else we can find for difficulties. Let's look at Bitcoin. Six trade cycles at a rough 2.1% profit. Very good considering just how difficult it is with the current market. And Civic. This asset has had a wild ride and is difficult to trade. But 9 completed trade cycles with this recipe. And it has a very limited amount of exposure, but you want to be aware that the max number of positions that this one picked up is 9 for one cycle. So it is always a very difficult asset to deal with, but even it, with all of its difficultness, is very profitable with this approach. So let's see what else we can find that does exceptionally well. Let's look at Ethereum. 7 trade cycles, 2%. Not bad. And it's a one-hit wonder on top of it all, which means you only have to worry about one position, which is great. So let's keep going. What else can we find? How about one that has been a nightmare for me for a very long time? Raven has always been a difficult asset for me to trade, and yet we see money, 8 trade cycles at roughly 2% average profit. Not bad. Something worth considering with this trading technique. For those that like theta or trade actively in theta, another wonderful way of trading, also exempted. And of course, the big one, at least for a lot of people, XRP has been a big attention maker over the last several years. And even though it doesn't really shift much, meaning it doesn't have a lot of volatility, it is still well worth having because it's a solid performer. Remember that if you have a lot of assets going at one time, and you have a limit on how many your trading platform will accept. In this case, I'm going to use Relay as an example. So if I have, say, 50 different pairs, where I only limit, say, 5, then I'm going to catch the most volatile ones at any given time. So I'm always going to get a mixture and having something in the market moving, which works out perfect for my risk assessment. TRX, another difficult asset, but with the proper trading recipe, a very profitable one. Average trade 1.9%. The last particular trade was 2.2%. So as you look at your options, if we do get a bull run, the way the experts think we are, this is a winner, and it will do very well in a wide range of markets. So you'll want to take advantage of this and really just let it work wonders for you. If you have any questions, please leave a comment. Please ask. I do read every single comment left to me. The MACD ADX is a wonderful combination with accumulation, and it does a good job at limiting exposure while still making sure you get very good entry points. If you're using Relay with conditional orders, it'll work great there too. So, thank you for watching. Please like this video. Share it with somebody if you know somebody that's struggling with an approach. And until next time.